Hello, traders. It's Tuesday, July 26th. We're about an hour and a half before the open. Let's start with the last pick, see how it did. Tesla didn't have any market constraints on Tesla because the market was already breaking out. So we had a nice market tailwind. Loved the chart on Tesla. Video came out right around in here. You can see how the stock continued to move higher, closed on its high of the day. And as I mentioned in the video came out last Thursday. I said, I believe that we are going to see follow through buying on Tesla. So you could take some gains in here, hold a little bit of the position overnight. You should see some follow through. We got it the next morning, but market conditions deteriorated. We're going to get into that in a little bit, and you'll see in the chart how the 100-day moving average, which I also referenced in the video, came into play for Tesla. And there you can see I said, this is where you want to make sure that you're out of the position and taking gains on it because the stock is going to hit that resistance level. The other pick that I had was Procter & Gamble, PG, but we did have a market condition attached to this, and that condition was that the SPY had to be below 391. That is the 50-day moving average. That's a critical horizontal support level. We're going to reference that again today. Never got there. So we did not get a market breakdown. I'm going to give you two picks today as well because, from my perspective, the market can do just about anything. We've got massive earnings announcements coming out this week. We have the FOMC statement tomorrow. 75 basis points is expected. So lots of news that could be driving the market action either way. On PG, you can see how the stock was testing the 50-day moving average and riding it. It's still hitting that resistance point. I still think that the stock looks weak technically, but we want to see more relative weakness in it. Had the market rolled over and sold off, yes, the stock might have continued to go lower, but right now, market, this is a daily chart of the S&P 500. You can see this downward sloping trend line that we've been watching very closely was tested on the upside. Now you can see how everything in here looked really, really good. I wrote an article and posted it on Reddit last week, and I was warning people not to get overly bullish in here. Why? We had decent reaction to very negative news. These are the CPI numbers, gaps down, market rallied, closed on its high, then we get a nice little release. We get through this horizontal resistance point. We test this downward sloping trend line. What's not to like? The volume. The volume. That is the missing ingredient here. We have to have volume. When I wrote the article, I had a lot of people ask me, they're like, Pete, how does a lack of volume make you bearish? A lack of volume does not make me bearish. It makes me question the bounce, that this bounce is not legitimate. It looks good on the surface, but without that volume, there's no conviction behind it. There's no substance behind it. This move can easily be erased. And so caution is warranted. This is not the time to think, hey, we're out of the woods. Everything's fantastic. This price action is beautiful. Higher low, double bottom, breaking through a downward sloping trend line, above horizontal resistance, above the 50-day moving average. All sorts of great things coming into play. I'm going to put that 50-day moving average up, and you can see where that comes into play right there. We're above that. But as I referenced earlier in the year, we had a very similar setup here. Hey, look at this. We have a double bottom, higher low. We're through a downward sloping trend line. We're through this 50-day moving average. Everything looks just beautiful. Not so fast. You can see how everything looked really good in here. Could this be a longer term low? That's what everybody wants to think because everybody likes a nice firm market that's heading higher. Portfolio values are higher. Most traders like to trade from the long side. because the price action is more consistent. Everybody's happy when everyone has jobs and the economy's doing well. Folks, we're not there yet. The interest rate hike that we're going to see tomorrow, it's going to take a couple of months at least for that to play out until we get to see what type of economic impact it has. The interest rate hikes that we've had in recent months are just barely starting to show what they're going to yield, what type of impact they're going to have on the economy. China still looks like a really bad situation brewing there, as far as I'm concerned. You have rural banks that are not allowing depositors to access their funds. You have people who have mortgages on new construction at the risk of ruining their social credit. They're not making mortgage payments. That's really bad for property developers. You've got property developers defaulting. China comes out and says, well, we're going to backstop the property developers to the tune of $55 billion. That is a spit in the ocean. That is nothing compared to what might possibly be needed. China is still regulating tech companies. They're still in COVID lockdown, still supply disruptions. There are all sorts of issues going on in China right now. Their economic activity is also declining very rapidly. It's the second largest economy in the world. I know that I'm beating this drum a lot in the course of the last 6 months or so, but I do not like what I see there. So these issues need to be resolved, and asset managers are not going to be very aggressive with all of these things going on. And then another thing that's going to come into play is that after these earnings announcements, after the jobs number in 2 weeks, everything is going to come to a grinding halt because you're going to have politicians flee DC. The Fed's going to be in recess, and all of this is going to fester and stew. Hopefully, we don't get any bad economic releases, but if we do, August and September are typically weak months for the market. So, this little light volume rally, look at the volume in here, is not to be trusted. Does this make me bearish? No. This makes me cautious. If all of a sudden, boom, boom, two huge long green candles closing on their high, stacked consecutively, big volume. All right, I have no problem with that. Those are the signs that we need to tell us that yes, now this is a longer term support level that we can lean on. Now it's time for us to start taking some longer term bullish positions. We do not have that yet. So we have to assume that this support level can be tested. So I'm going to take a look and see what we've got on both sides of the market. We'll run a couple of searches. And let's start off on the bullish side. I'm going to run a custom search here using Option Stalker. And we're going to go in. Yesterday, the market was kind of all over the board, by the way. Today, Tuesday, we can expect very, very choppy range bound trading because there's a lot of position squaring. Everybody's going to be just waiting for that FOMC statement tomorrow. So I'm expecting a range to be established and for us to chop around. Tomorrow is going to be dead to the Fed. So play very cautiously with your trades during this calm before the storm. You should not be making any big trades right now. Reduce your trade count, be very, very selective. So let's take a look at what we've got going here. I looked for a stock yesterday that was greater than the prior day high, and I want to see heavy volume and good option liquidity. Now, yesterday the market was very, very flat, very range bound. There wasn't much volume going on. Volume, as I mentioned earlier, is the secret sauce right now. That's what we have to have. So let's take a look at stocks that have some decent volume. I'm going to move this off screen. I'm going to click through a few of these and I'll show you some patterns that I like. So just going to go into that daily chart. You can see that horizontal resistance is being breached right here. That's not too bad. Got some decent volume, relative strength. Not bad, not the one I'm going to pick. Calm, I like that. You can see a very well-defined upward sloping trend line, breach to the upside. This is an ascending trend line that connects the highs. These are not the highest probability breakouts to trade to the upside. They fail pretty easily. In fact, they are often a buying climax that fuels the underlying through that upward sloping trend line. But for right now, looks pretty good. Not one that I'm going to trade. And I'm just going to continue to flip through. Too choppy, nothing going there. Still has some horizontal resistance to get through here. So I like OSH. This is pretty nice. You can see downward sloping trend line through here. I like that breakout. You've got those long green stack candles, a little bit of a retracement, support above the 100-day moving average. So buyers knew that they wanted to get in and they did not feel it would get all the way down to the 100-day moving average. So they started scooping it right here. That's what gives you that bullish flag formation. A little bit too far out of the gate for me right now. That's the only reason I don't like the stock, and it's hitting this horizontal resistance. But otherwise, OSH is pretty nice. This has got some promise here as well. It's getting through this horizontal resistance, but just not a lot of room to two major moving averages there. SIGA, very volatile. So we're almost to the stock that I like. Higher low double bottom, trying to get through this horizontal resistance. So all of these could be good, and that's why when I see them, I just drop a GTC alert line. If it gets through that price point, it's through horizontal resistance, it's through the 50-day moving average, I've got a higher low double bottom, it's through this downward sloping trend line. Lots of good stuff going on. I just don't want to be in right here. I want to be in here if it can break out. So the final stock in this search was WWE. So you can see how we've also got a downward sloping trend line right here, breach to the upside, nice gap higher, big volume, relative strength through horizontal resistance, 5-minute chart, held all the gains yesterday, never challenged the open yesterday. So very, very nice. Yeah, I like it. I think this is a stock that you can watch on the long side. I think there are going to be some opportunities for you to buy it when you get these waves of market strength Tuesday, Wednesday, and perhaps Thursday after the FOMC. So that's a search that I ran. Very easy. Just looking for a stock that's above the prior day high has got really good volume and good option liquidity. So let's switch gears a little bit. And if you think about what's happened in the market during the course of the last 2 weeks, we've had a nice little market bounce. And a lot of the dogs have been barking. What I mean by that is a lot of the laggards, a lot of the really heavily beaten down stocks have participated in the rally. Some of them may be rolling over. So what I'm going to do is I'm going to look for some of those stocks that might be breaking a 2-hour algo line. So first of all, I'm going to take this criteria off and take the heavy volume off. And I'm going to go in, I'm going to just take a look for stocks that have been weak relative to the S&P 500 across all time frames. Then I'm going to go in and take a look at that algo line breach on a 2-hour basis. And this is probably going to give me some pretty decent results. Okay, you can see Apple's at the top of the list. So we're going to look at all these stocks very quickly. And again, these may not have the volume that we're looking for, but they've got other decent characteristics. Before I even consider a stock for day trading, I have to like it on a swing basis. That gives me an extra level of protection that tells me that the longer term wind is at my back. So that if I don't nail my entry during the course of the day, I at least know that the stock has that momentum in that direction. Apple's not showing me a lot besides failing that breakout above the 100-day moving average. So nothing too great going on there. I've got a couple of different trend lines already drawn so that I'll get an alert. If it fails, this stock is rolling over nicely. Upward sloping trend line, resistance there, lower high, couple of bearish hammers off the top. This is not a bad looking chart here. So yeah, this would probably, and it has room to go to the 100-day moving average. So yeah, I got to say AXSM, Apple, X-Ray, Sam, Mary. That's a pretty nice one. You can see this nice defined downward sloping trend line that when it breached here and it gapped up That was actually pretty nice. It fueled that move, but the stock now is relatively weak. So yeah, I think there's probably potential for this one to be a nice short. Take a look at that 5-minute chart. Steady selling all day. Yeah, I like that one. Nothing there. You can see how choppy that stock is. DOCS. Got a nice defined upward sloping trend line here. Broke out above the 100-day moving average. Long red candle. Fail. Yeah, that's pretty good. This was horizontal resistance. You had your breakout right there. That's starting to fail. Yeah, I like this one too, actually. This one looks pretty good. So, click there, click there. Got a nice upward sloping trend line that I can lean on. I also can take a look and see if that low from that candle is violated because that is horizontal support. So click GTC. If you are not using alert lines, I got to tell you, you are missing the a whole ball game because these alerts, when you set them, you're going to be alerted when key price levels are violated. And it only takes a couple of seconds. The next thing you know, you get a market move in your direction. Stock continues to be weak or strong. Now you're getting these alerts. You don't even have to look for the trades. They're delivered to you on a silver platter. I use them for uh, entry primarily and exit on a daily basis also. So when I have a position on, instead of having a stop and getting ticked out of a position and then having the stock continue to move in that direction, move my way, I can use an alert. And then I get the alert. I can take a look at the stock. I can evaluate. I can drop another alert line. Same thing for entry. If a stock is running higher, 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 and I want to buy a dip, then all I need to do is to set an alert. And I'll give you a classic example. I'm going to digress a little bit here, but CalMaine yesterday looked great. As I mentioned to the chat room yesterday, I said, this is fantastic. This stock has volume. It's got really nice strength in here, but I would not be chasing on a day like this. So why don't I drop a couple of alert lines? I suggested using that low right there as an alert line to come across here, that as an alert line to come across here because half of that long green candle was preserved on that. And here I would get my first alert, which is still above the top of that long green candle. When I see these long candles like this, I use them as a reference point. So lo and behold, up, here comes the stock. I get an alert. A few minutes later, get another alert in here. Now what do? Well, I know that I want to buy this stock because it's been super strong and it had that really nice D1 breakout that I referenced a few minutes ago. So now, as it's starting to come in, I start dropping alerts. Click, 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 click. Now, tell me. So as the stock starts coming in, I start lowering my alerts so that I know when it bounces. You get this long green candle in here, you get an alert. Okay, I'm in. Nice little entry point. So that's how you can use alert lines to help you enter and exit trades. In any event, DOCS was the last stock that we took a look at, and we'll go into that daily chart. I've got my alerts set. I like it. Still nothing setting up for sure. GM had some negative news. Supply disruptions are impacting their sales, so I think the stock is going to be down this morning. So that's not too bad. Downward sloping trend line is intact below the 50-day moving average. That could work. LCID. LCID I like because we've got this upward sloping trend line here that is going to be breached on the downside if it takes out that 50-day moving average. You can also see that we had a horizontal breakout. There's your horizontal resistance, breakout above the 100-day moving average. Wham! Right back below the 100-day moving average, and now that is a failed breakout, and we see some momentum yesterday. I think LCID works also because we have this upward sloping trend line that also comes into play. Click there, click there. That's violated. It's got some nice downside potential. Could be my pick of the day. We're going to continue to take a look and see what we've got here. There's another nice one, GTC. Just click there, click there. Drop these alert lines. You can see how they're coming into play just below these major moving averages. May not ever trigger, but if it does, I'm going to have a decent looking trade. So I've got a decision to make here. LCID is one I like. AXSM is one that I like. I think AXSM is one that doesn't have a lot of volume. Let's take a look at that 5-minute chart again. So you can see a nice steady, I think this is one that you'll want to watch. I'm going to go with LCID and I'm going to put a couple of constraints on it. First of all, for any bearish trade right now, S&P 500's got to be below 391. That's where the 50-day moving average comes into play. Also, you can see horizontal, its support now was resistance. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Lots of touches and a general area between 391 and 393. So if this 50-day moving average is violated, okay, now I know I've got a market that's starting to soften. This move higher is starting to lose its steam. Now I want to focus on the bearish side a little bit more. LCID is the type of stock that I want to find. So the caveat, 391 is the key level on the S&P 500. As far as LCID, we want to see that stock below the 50-day moving average. I don't need to have it below this upward sloping trend line. I have enough things to tell me that it's going to soften up here. You've got relative weakness on a daily basis and all time frames. We've got this horizontal was resistance. That breakout has now failed. So anybody that bought here on that breakout is now getting flushed out. If it can get to this upward sloping trend line, you want to take some gains here on your short position. And if it blows through that, keep some of it on and let it ride, because if that upward sloping trend line fails, you're going to see continued selling in LCID. So LCID is your short pick of the day. We've got nice upward sloping trend line. You need to have the S&P 500 below 391, SPY that is, and we want to see this stock below the 50-day moving average. You get those conditions, you can take that short position. So those are your two picks of the day. We've got the FOMC statement coming up. So right now you should be keeping your trades fairly small because we can expect choppy price action Tuesday and Wednesday. Thursday, all hell's going to break loose. Tonight after the close, Tuesday, we've got Microsoft announcing and Google announcing. Then tomorrow, Wednesday after the close, we've got Meta announcing. Thursday after the close, we have Amazon and Apple announcing. So those are the big mega cap tech stocks. How they respond to earnings is going to determine market direction. And then look for really soft trading in August and even into early September, because there's not going to be a lot going on. Asset managers are going to be watching economic releases, evaluating them to see what impact higher interest rates are having on growth. That's all I've got for you today. Please leave your comments. We'll see you in a few days.
Thank you for watching this YouTube video. I'm Pete Stolzers and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.